Okay, I'm going to talk a little bit about what a security is and how offerings work. Now, first of all, this is not legal advice. I'm not an attorney, so certainly don't act on any of this in any way that would expose you to economic risk. And that, I would say, would generally be defined as anytime you're asking for money or accepting money or something like money, or you're profiting from something, you should review it with attorneys, especially if you're in a jurisdiction like the United States where these rules are taken seriously. But anyway, I'm going to explain my understanding of what some of these words mean, not from a legal standpoint entirely, but that is certainly intertwined with it. You could be an anarchist, or you could certainly be outside the United States, and you would still have some sort of definition of what a word like security means. And security basically is, as I mentioned in the last video, it's an agreement. It's an agreement that is tradable. So and here's the definition. This is from the 40 Act. This is interesting because I usually use the 33 Act. The 33 Act is the main act that sort of defines this, but it's interesting because the 40 Act, which came some years later and covered investment advisors, pretty much says the same thing. So it says any note, stock, treasury stock, security, future, bond, debenture, evidence of indebtedness, and so on, so on, so on. You can read it yourself or just get the idea here. It's very broad, and there's been cases in the courts where they have said that this should be very broad. Pretty much any kind of scheme or deal or good thing, bad thing, it's an agreement. Some of them are the worst agreements in the world. Those are securities. Some of them are the best agreements in the world. Yes, those are securities too. You could have invested in the Facebook IPO. That's a security. That's a good deal. You could have invested in a lot of scams that were securities and lost everything. So securities are neither good nor bad. They're basically just agreements. It's any of these kinds of things like notes or stocks or warrants or privilege to enter into a nationally securities exchange or privilege on a certificate deposit and so on. It's a pretty comprehensive definition of what they are. Now, this gets very confusing because you have the definition worldwide by definition in a dictionary of what a security is, and in its basic form, that would be something like a tradable agreement. You have sort of the United States definition, which would be kind of on the safe side. Going up, I usually use this definition because, particularly anything that might be remotely legally related, because I'm in the United States, and if you sort of go by this one, you'll be in pretty good shape. Most other countries, unless you're actively selling. And again, this really comes down to if you're selling something or raising money, these are the laws that you have to be aware of. Um, it's confusing to a lot of people the difference between a security and an offering. So securities are, as you see, very broad, and they're quite common. And you've probably interacted with securities more than you realize. Small businesses are securities typically. You could have a very, very tiny business, even a sole proprietorship, certainly anything incorporated, and that is a security. Maybe it never changes hands, maybe it's never worth more than $1,000, but it is a security. We don't think of it so much because it doesn't typically trade, but that's a different kind of thing. When you get into offering and trading, those are two different things. But a security is still just basically an agreement, and there are tens and tens of millions of these agreements around the world that are securities. Everything you see, pretty much, there's some kind of agreement that is usually a security, even by this definition or other ones, some sort of agreement. Now, offerings are a different thing. That's what most of the laws focus on. That's why these issues of ICOs and things like that may be an issue. With offerings, securities, if you're out raising money for a business or any of these things that fall into that category, then you're subject to, especially in the United States, you'd be subject to securities offerings. Or if you're selling to United States customers, you're subject to these rules. And the rule says two things. One, you could register with the SEC as a public offering, and you can do that. It's very, very expensive, very difficult. Or what almost everybody does is you could be under an exemption. And the more strict the exemption, the more easy it is to do. So if you just don't offer it to anyone, you're not even subject to these. If you only offer it to your cousin and it's under low dollar amounts, that's very easy to comply with here. Okay, if you want to go and offer it on the internet and you want to have 50,000 investors put in $1 million each, that's a completely different story. That's much more difficult to do. And as you can see from these exemptions, that's how you offer it in the United States. So these are the different ones that you'll see quite often. You'll see these Reg Ds, Reg A plus, and there's Reg crowdfunding. Reg crowdfunding is really cool. A lot of these lower ones, raising a million, Rule 504 Reg D. There's some blue sky issues with that, but that's pretty cool. All the Reg Ds. There's a lot of legal ways to raise money, and I believe that security could be a token or not a token, but you can legally do it. And especially if you go lower, if you go on the low end and you have a token that represents equity and you do lots of other things, again, clear it with a lawyer before you do it. But it seems that there are legal ways to do it. This one is interesting. Section 4A2. I used this one. I'll show you this later on a video. I use this one because you'll notice nobody ever talks about it because it's the most restrictive. You can't offer, you can't solicit, there's no requirements, and you can't really do anything with it. So I just did that as a demo. Now we converted that later. I'll tell you about it. But anyway, that's sort of the landscape of how these things how these things work. So offerings are different than securities, and being aware of these things, whether you like it or not, they are part of the world. And there isn't really a way to tech around this or cypherpunk around this in the immediate term. Eventually, hopefully, smart contracts will replace a lot of these things. People will share risk and share ideas directly. There will be a lot of direct trading based on things like Bitcoin. That will be really cool. But in the meantime, while we have the kind of conventions that we have around raising money for corporations and things like that, there's likely to be a lot of securities, and that's okay. I think it'll be cool. I think we could have hundreds of thousands of securities. Much smaller companies could be sort of public in the sense that they can trade and have some kind of market. It may not even be that liquid, but they will have some sort of value based on books. There'll be all kinds of neat things that can happen with this. I'll talk a little bit about that with some of the other videos, but it certainly could be a really, really interesting way that this unfolds. And so separate the offering from what a security is. A security is a tradable agreement, basically, and they are here to stay. They're a good part of the economy. Securities are good overall. A lot of them are going to be junk in this. A lot of them are going to be bad agreements, but that doesn't mean agreements are bad. There's going to be a lot of junk, and I want to emphasize that again and again. As excited as I am about the potential for tokenized securities, as with many good new technologies, if it even is good, I may be wrong, it may be bad, it may not work. But even if I'm right and it is good, there is a very good chance that because it's good and there's a gold rush behind it, that there's a lot of junk around it and a lot of scams. So unfortunately, although I'm saying that there is potential that securities tokens could be a really good thing, there may be so much junk that it makes it fail, or just a lot of people lose a lot of money, and there's a lot of low quality offerings just like the ICO batch, but maybe even worse, maybe bigger. So you definitely should be cautious about it, cautious about securities tokens in general. It could be exciting, but it is something to be very, very, very cautious about. And just because something is a security means it's slightly more uniform, maybe, but it does not mean it's good. Bernie Madoff's securities were securities. That's why his action was enforced by the SEC. They enforce securities actions. So securities are neither good nor bad. The SEC does its best to make sure that they are not bad by sake of things like fraud, which definitely make things bad. They want to make the markets fair, but they do not enforce against things like bad ideas, because they are not in a position, and should not be in a position, to judge whether something is a good or bad idea, because a lot of ideas may have sounded bad when they came out but turned out to be surprisingly good, and a lot of things that were good ideas turned out to be bad. So luckily they don't judge that. They do judge very harshly on things like fraud, and I think that's a good part of the market. And if you look at, as sort of a very free market oriented person, I used to say, oh, just abolish all of these laws. But actually, in thinking about it a little more deeply, and looking at Ludwig von Mises and other writings, it is an important part. You do need to have some sort of enforcement mechanism. Enforcing these types of contracts is a valid use of some sort of. Maybe there are ways to replace government with it, but you do want these enforced in some way. For example, if you give someone $1 million for 10% of their company, and then they sell that company to Microsoft for $1 billion, you say, hey, great, good, it worked, I took a risk, I got a payday. Can I have my 100 million? They say no. Well, that should be enforceable, and that is generally enforceable under securities laws. So I think they are legitimate laws. It's interesting to talk about, but we'll get into some more interesting things about securities. Either way, they're here to stay. They're part of the world.